Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. And in today's video, we're looking at the Halifax House Price Index as we do every single month and understanding what's going on with property prices in the UK. Now, I've got a vested interest in what happens with property prices. I've got £3.5 million worth of property, so a 1% swing means that I make, on paper obviously, £35,000 to the positive or a £35,000 loss. And that's how I've managed to rack up about 150 grand's worth of paper losses in the last 6 months as the housing market has contracted by about 5%. That said, I haven't sold anything, so ultimately that loss is only on paper. And I've enjoyed lots of gains over the decades I've been investing in property, so I don't feel too sour. But what we want to do on this channel is really bring the information so that you can understand what's happening today, and we can start and formulate some ideas of what might happen in the future. And that's really my aim with what we're doing here. So if you'd like that sort of content, please give this video a big like. It really does help me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? We've got a subscriber dividend portfolio up here, £7,500 in there at the moment. I put £2,000 into it every single month, and I pay those dividends out to you guys. And it means we can take part on a passive income journey together, and I can reward my subscribers, and hopefully that will inspire other people to invest in something that's so simple as index funds where you get monthly dividends out. But let's get into the video. Let's talk about the Halifax update. Let's start to understand what's going on. And if I'm honest, in the last month, not a lot has changed. There's been zero house price change when it comes to Halifax's data. So we're still saying that the average house price in the UK is £281,684. Now, what does that mean? Could we be reaching an inflection point? And what I mean by an inflection point is a point in time in which confidence maybe changes. So if you were going up and you reached an inflection point, then the prices would start to come down as confidence wanes. As confidence diminishes. Now conversely, if we're now currently declining, like we have been for 6 months, and confidence returns to the market, and we'll talk a little bit about that in a minute because interest rates, interestingly, obviously went up by the Bank of England, fixed rates came down. And that means the market is betting on one thing, that interest rates are going to come down in the future. But let's get back to what I was saying. If we get this inflection point, maybe house prices have come down for 6 months and we start to rise, that would be the point at which you get the best possible deals at that inflection point. And certainly for myself, I'm on the lookout at the moment for a deal. We have been putting some cheeky offers in on some properties. So far, we haven't had any luck, but we're going to continue to do it and see if we can bag ourselves a bargain. We need to negotiate. Because there's uncertainty, we still need to negotiate quite hard. I'm looking for 10 to 15% off what I think it's worth to build in some money when I buy. I know you make a lot of money when you buy if you buy correctly. So that's what I'm trying to do. So if we look at the quarterly change, obviously the quarterly change, we're still down 3.6%. As I said, when you look at the graphs and the data, we're down about 5% since the market turned to the negative. Today, 0% change this month. Rightmove, interestingly, saying that Paris prices are going up, or asking prices going up. Remember, Halifax, data looking back, sold prices. Rightmove, data looking forward, asking prices. Just because you're asking something for the sale doesn't mean you're going to get that money. Halifax is looking backwards. This is what things have sold for. So the two bits of data, somewhere in between them, we're going to be able to formulate what's going on with the market. Now, HMRC, now this bit I think is really interesting. Not necessarily the HMRC, but the BOE stuff. HMRC said from November, the completed transactions in December is minus 2.6%. So there's less transactions completing in December than there was in November. Now there's holidays in December. There's lots of reasons why that might be. It's too small a difference for me to really consider that information as anything other than anecdotal. But this one is key. Bank of England, now they report on mortgages agreed. So minus 23% month on month, minus 51% year on year. And I think we all know somebody who's putting off buying a house or an investment or a home, whatever way you consider it. I certainly know many people who've been putting it off because they're scared of interest rates. Now the market has turned a little bit on interest rates. Bank of England put it up, fixed rates came down. That means the market's betting that the Bank of England's going to have to start to retract interest rates shortly. So when they start doing that, will buyers come back to the market in droves and take advantage of what they would consider much more certainty? I believe they will. I know many people who are sitting on the sidelines. I've got friends, I've got family, all who are waiting for a clearer sky to start buying. And when that happens, considering there is still a shortage of houses in the UK, we could see a lot of movement to the upside, in my opinion. So obviously I've got £3.5 million worth of property, I've got £1.7 million worth of equity. I could sell all of that and net myself the 1.7 million, couldn't I? But I consider this a long-term investment, and I honestly believe there will be a point in time in the not too distant future where this market will turn around. And when it does, I think it will turn around quickly. Just because of the amount of people I know that have been putting off buying things. They still have cash, they're still available to buy, they just don't want to commit to the higher rates on the mortgages. So that bit of data, the minus 51%, the half of the buyers that are missing from the market, I think that's the key bit of data. But when that turns around, this monthly change isn't going to go to the downside, it's going to be massively to the upside, in my opinion. Now, when we're looking at buyers, this feeds through, right? Minus 51% on the year-on-year for the mortgages, minus 39% on buyers, which month-on-month changed about minus 1%. Agreed sales, down minus 41%. So that's people who have agreed to buy. They haven't completed. The HMRC, remember, that's people who've completed. Agreed sale. And this is from RICS, the Royal Institute of Chartered Surveyors. I got it right first time. So they're essentially representing all the estate agents and what's been going on in the market that side. But for me, it's the Bank of England that are controlling the market right now. If they continue to raise interest rates, house prices will be subdued. But if they start to move back on that policy, and remember, in the UK, lots of people are on 2-year, 5-year fixed, and when they start feeling pain, the economy can go into recession very quickly. I can't help but feel that in the next 12 months, this is going to turn around. And when it does, I think there's lots of upside there for everybody. So guys, that's my update. There's not a lot going on this month, 0% change, nothing else to report really. But these bits of data down here, I think are really interesting. Let me know your comments down below. I'll reply to every single one of you guys. Remember, subscribe to Dividend Portfolio video out on Thursday. Make sure you tune in for that, enter that competition. There's going to be some money to win. And as always, like and subscribe guys, and I'll see you on the next video. Cheers, guys.